Hello, today we're going to take a quick look at a futures call that we made here at TradeSight on Tuesday, May 8th. I'm going to walk you through the ES, that's the S&P 500 futures E-mini contract throughout the session in bar replay mode here on the eSignal platform. And we had a couple of calls today on the futures, but I want to focus on one that we made in the afternoon. So I'm going to walk you through the day, and we'll bypass the short calls that we made in the morning and get straight to the later day call. So here's the ES opening up. This is 2 5-minute bars into the day, so we're about 10 minutes into the day at this point. You can see we gapped down. Let me just point out a couple of points on the chart here. First of all, you've got a black line right here that you can see forming. This is the 50% retracement of the gap. So what that means is, if you take yesterday's close up here and take today's open, down here, halfway in between is the black line. We find that that's often a key support or resistance point. The dashed red line that you see right above that is what we call the TradeSight lower pressure threshold. It's a key calculation, becomes support or resistance point. Since we're gapping beyond that point today, typically you tend to head lower. That becomes, and when you gap past that point, it leads to what's called a gap and go day more frequently. You can see a red line right here, right where the actual activity is. That's the opening level of the day. And as the day progresses on, all three of these lines are going to be flat lines that are going to come across the screen. We've also got two or three other lines that will be drawn as we go, but you can't see them yet. So let's move forward a couple of bars. And you can get an idea. Early on, we had gapped down, we pushed lower. We tried to come back up and reclaim sort of the highs of that first bar. We couldn't get through. And that's when things really started to pick up some speed to the downside. As I said, we had some short calls earlier in the morning, but that's not what I wanted to focus on here. So this is the move down. Now there's some extra lines you can see. We still have the red flat line is the opening level, but we've got three other lines down here. A slightly purple line is the VWAP, that's the volume weighted average price, and two red lines below that. They're almost the same so far. One is a short-term moving average, and one of them is the midpoint of the day. So as we proceed to head lower, let's see how the action plays out. Again, this takes us down. We went pretty low in the morning. Volume in the market was heavy. It was a good trading environment. And now you can see we're getting our first bounce of the day about 90 minutes into the market. And again, you're going to want to watch that purple VWAP line and the red line that's associated or very near it. That's the midpoint of the day. That's the high plus the low divided by 2 so far. That changes as you make, obviously, new highs or lows for the day. So as you can see here on our first rally, we came right up and we hit that midpoint of the session and that VWAP area. Okay, a very common point to stall out and retrace to, especially once the early morning volume sort of dissipates. Now, we made another move lower here. We have three lines on this chart that we follow that we use to determine what we call market direction. The first one is the red line, the flat line, the opening level of the day. We look to see if we're above or below that line. The second one is the midpoint. That's the second flat red line. And the third one is the short-term moving average, which is currently green because we're holding right above it, or at least we have been up until this bar. So when we're above at least two of those lines, market direction is considered green for us. When we're below at least 2, market direction is considered red. So as we proceed here, you can see right now we're below all three. Market direction solidly red. And we play out over lunch. You can see volume dries up and not much going on for activity-wise. Now as we head back towards the second half of the day and we come into the last 2 hours play, the market once again comes up, hits the VWAP midpoint area. Look how it uses that midpoint so specifically. Now again, remember, the opening level, the midpoint, and the short-term moving average. When we're below 2 of them, market direction or more, market direction is red. When we're above at least 2 of them, it's green. So as long as we stay under this midpoint, which is between the upper and the opening level and the short-term moving average, we are below at least 2 of the lines. If we break above that midpoint, market direction is going to shift. And since this is a heavy volume day in the market, that's usually going to be meaningful. So we're going to watch for that and see if we can actually break above that midpoint, because that would make market direction green. And that's a big shift for the institutions when that happens. It's a point that very few people know about or understand, but it's very critical. And so we had a futures call for our traders to go long above this line at 1352 if we broke above it. And let's just see how the day plays out. Again, you can see we stall out right at that line for about an hour here. I mean, look how solid that resistance point is, and most people have no idea that that level's there. Now here we go. Here's where we break above that line. This triggers us into our long trade, and now your market direction has shifted, and you can even see the box in the lower left corner of this chart where it says direction. That turns green when our tool turns green when that happens. So that gives us a complete institutional bias shift, and that's why we go long at that point. And you can see the way this thing then proceeds to play out over the next hour or two as we try to wind down the day. And look at this on top of it all the way back. Now we're at new highs for the session. If I scroll back, you can see we're just getting above where that opening level was. That's the red line. We had the gap fill to the prior day's close would be up here, and we're coming up. We hit the 50% retracement of the gap. That's that black line I had referenced earlier, and run right into the dashed red line, which was that key calculation we gave you coming into the day, the lower pressure threshold that we had gapped under. And guess what? That ends up being it for the rest of the session. So a key entry point for us, the switch from market direction red to green, is the break above the midpoint. The market addressed that line, made a cup and handle formation against it very specifically, triggered, broke out, and ran nicely, and in the move straight back to that 50% retracement and the lower pressure threshold, which we had identified earlier in the morning. We had said those usually could be resistance if we got there. It took us till the end of the day to get there, but still a nice trade on the futures.